Hey, good afternoon. This is Bob from Trade Genius, the 26th of July. I'm not going to go through a whole lot of charts today. I think there's some just really important things that happened today, and I'm just going to talk about those because I think that's what's going to play out over the next 60 to 90 days. So, first of all, tomorrow Apple reports, and Apple's been pushing up pretty hard here since the 1st of July. You know, it's essentially from the 6th to tonight. It's let me see here, a little too fast here on my. Here we go. So, you know, it's approximately up 8%. You know, for the month of July, and you know, this is not supposed to be the big quarter for Apple, and you know, other than Facebook's reporting, we'll see how they come in tomorrow. Is that I think the Nasdaq's gotten ahead of itself, but Amazon reports tomorrow too, and Amazon started pushing up higher already too. So you know, and Amazon's been up. Do this again here. So these are approximate. So Amazon is up 11% here for since the month of July, it looks like. And so I think a lot of these guys have already been running ahead. And you know, Google reported, and they've been suffering. And I think Facebook's taken a little bit out of its hide here a little bit, and same with Twitter. So some of this is going to be a little zero-sum game. Facebook reported, and Facebook's up 2%, but when Facebook started its move here on the 5th of July, okay, I'll just go, look, let me go to here first. So, you know, Facebook was up here 11%, and now they're up. Now they're showing up here 19% for the month of July, and so that's those are some pretty big moves, you know, and especially since the forward guidance aren't like spectacular here. You know, Facebook's spending their whole earnings call talking about how they think these growth rates are starting to decelerate. So, you know, my view is I think the Nasdaq is probably topped tonight, and I think Amazon and Apple will report, and I think everybody will sell off going into next week. That's my speculation, and the reason being is that this has hit absolute lows. So in 2007, they had the VIX hit its low, and then for the next 12 months, it started the financial crisis, and then we had, you know, the huge sell-off. And so this is what they do all the time. The Federal Reserve gives us kind of an all-clear kind of signal, and then you just have the speculators just run this thing to the mathematical absurdity. Well, they hit it again today, 8.84 in the VIX. The problem is that it's been used as a funding source. They force these passive funds into buying more stock because their value at risk falls, and when that changes, it just rolls over hard. I think we're at over 53% of all funds are now what they call passive investing, and so they don't care if they see things go the other way. They just start selling, and you got ETFs that are owned by ETFs that are owned by ETFs. And the other thing that happened today is you look at the yen. So you got the yen here that is starting to pop, and this is another funding mechanism. So what they do is that people will short the Japanese yen. They'll use that cash they get from shorting it, and they buy into the markets. Well, when the yen starts to reverse, they lose that funding mechanism. So they've been shorting volatility, they've been squeezing out shorts, and they've been shorting the currencies. Well, all those things have ended, and I think the volatility thing here as well, and all these Nasdaq companies are reporting, and they're averaging 13% gains, year over year, and you got the Nasdaq going at 30%. So my expectation is that you're going to get a reset here. How hard it sells off depending on how fragile everything really is, and I think Yellen, she kind of gave the throw up the hand thing here. Look at this. Look at gold too. You have gold popping today. You got copper that popped yesterday. They jumped it, okay, and it moved up again today. You have look at oil. Oil popped. Okay, this is my big position. Wheaton popped. And this is a twofer. And then here you have this. This is the 10-year yield. Okay. Whoops, sorry. See if I got that right. I'll have to look it up. Hold on. I'm going to cheat here. Maybe I'm doing it wrong here. It should be TNX. But it fell today. And so what that's telling you is that the Federal Reserve has seen that there's no growth. The Japanese minister came out and said, I can't create inflation. Draghi last week came out and said, I'll keep buying bonds. So they're all saying is that we can't get the economy going. And the only thing we know how to do is devalue. And so we've been at the brunt of that. And now that we threw in the towel too, all the things that people need to own are going to go up, in terms of food and oil and copper and steel and uranium. All that stuff's going to move higher. These things that people all need to live on. So all the costs in the system is going to start food are going to start pushing through. But incomes are not going to go up. It's against the wall of robotics, of global labor, and the other things that are pressing on people like healthcare and rent, and this is going to blow up the system. And so today, I think this is a very important day. It may not seem like one, but it's a very important day. I think this is the week that the financial markets top and the commodity markets move, and you're going to see a rotation. And then in 90 days, when the Federal Reserve starts to pull back the balance sheet, then I think you're going to see everything fall off, because that's going to dry up credit, and then you're going to see a big move into bonds, and you're going to see a big move into cash, and you're going to see liquidation of debt. So this is what I'm trying to share with you guys, and we had a very good day. We're having a very good month in terms of what we've been picking, and now that the metals and miners, I think this move is going to be secular. I think our performance is going to go up even higher, because we're most comfortable in this part of the world of metals and miners and commodities, and once we get this secular move going, we're going to make some really good money on this side of it. And I think you're going to see it rotate out of tech, and you're going to see it rotating out of financials. The fact that the financials are not down more today is just amazing to me. I think they fall off a cliff because they just lost a couple funding mechanisms. I just think it's going to take the market a couple days to realize that. But you might want to think about shorting the banks here pretty soon as well. So it's Bob from Trade Genius. Things are going well on our side. Check us out, TradeGeniusAcademy.com. We're running a special for the rest of the month. The interest has been overwhelming and humbling to us, and so we're trying to keep everything cost effective for people to be able to use our services, to use our training, and so I think you have till to the end of the month to be able to get some killer deals. I feel like Larry here selling the mattresses. My partner's killing me. He's giving away the store, but I think long term we both will benefit from you being able to use what we're providing you, and be able to join a community that's going to really help you make money. So I look forward to seeing you, and looking for you to be part of our team and our family. And I think it's going to get really fun here for the next 60 to 90 days. You guys have a a great night, and I'll catch you guys tomorrow. Thanks. Bye-bye.